In the remaining part of this day, we're going to just review once again a little bit more about zone trading. The day is not closed, the bell is not rung. There's 15 minutes yet to go, and according to pattern, we'll talk a little bit about pattern trading, we should yet see a new high for the day, and that may be coming up very, very, very shortly. Let's take a look at a couple of things. Now, we started out the day using a 500 tick bar zone for our trades, and we saw various reasons why as the day moved on that was probably not going to be the zone that we should retain, at least not for our exits. It's worked fairly well for our entries, but not for our exits. So let's move back to about 10:30 this morning. We showed you in our previous video where this high really got very nicely caught by using a dual zone approach. Market retraced, came down to this point. We got our first long signal, rallied up again. A 500, as you can see, way too early in its approach. Market drops off again. We get some signals in here, a little premature here, nice move here, and then again, way too early on the exits. So let's take a little different approach on that and examine the use of a dual zone. So watch carefully the period from roughly 11 o'clock all the way into 12:20. We had short signals here and here, and then finally on the top here. Here's the very same period. Let's move it back, pardon me. Okay. Here we are at the bottom of that move, around 11:11, and up into 12:22, and we don't have any short signals. Not here, not in here, only in here. Why? Because of a broader dual zone. Look at how the strategy is set up. These are our entries. We're using the premium, simple MACD, and here's our zones. Scroll down to the zone area. Here's our two zones, 1100 and 2580. Those are our zones. We eliminate the extraneous trades in here, and we just simply examined the zones using our zone chart to determine where the best entry, or pardon me, what would be the best zone to use. It was just an eyeball approach. Okay, not always going to be right, but we just eyeballed it and said, here's two zones that seem to be working pretty well. Now notice what happens on the downside. Okay, we got a trade in here using the 500, but only a trade in here using the dual zone. The dual zone approach both got this exit, or pardon me, this would have been an exit had we been into a trade, but in terms of an entry, nice entry here, beautiful entry here, another move up, again a short signal there. And look at the equity. Boom. Very, very nice. Very nice equity. I keep on having this problem with this word curve. I don't see a curve in here. I don't see a curve. Why is that? I don't know. Okay. Now, that's the use of a dual zone. Now, a couple of things that we've noticed about setting this up with the zones. We have two strategies set up here. Now look carefully at how this is set up. The first setup Groups that we're using are, pardon me, groups to use, ES and groups to use, set to 1. So now normally what that's referring to is this first set of strings, this first 6. And that's it. But notice over here, we're not really using group reversals. Okay? We're not even using group reversals here. Not technically. Because a group reversal setting would require this and this to be true, as well as that to be true. So this is just a very simple setup whereby we're using the premium, and we're just basically looking at the MACD. Is it positive or negative on a 100 tick chart? That's it. Okay, that's what this is all about. This setting right here, 1, down here, 1 and 1, okay, that simply means I'm only verifying the MACD trend of a 100 tick bar chart and a zone. The 2 zones that we referred to here. And they're beautiful trades. Now, notice this. In this case, we're using all of our charts for detecting group reversals. This is a true group reversal setup using the same zones, right? This would be your typical setting for group reversals, and once again, here's your 2 zones. Our long signals, our long signals are going to be painted either this way, short signals this way. Let's just change the color of our short signals here just to point this out. You don't have any. Okay, there are no long or short signals coming off of this chart using a group reversal approach. Here we're just getting into the new high for the day. That should produce a new high based on a red day pattern up. So what do we learn from this? What we learn is that when using the zones, group reversals may produce a problem. And the reason that it produces a problem is because when you get the reversal has to take place while you are still in the zone. Okay? So let me bring up a zone chart and we'll discuss what we're talking about here. All right. So this is an 1100 tick bar, and there's your new high for the day. And notice what we're talking about here. Right? Now on an 1100 tick bar, here you are in the lower zone here, and once again barely in here. Okay? Barely. Now according to zone trading, the low of the bar has to be less than, in order to get a long trade, the low of the bar has to be below the lower zone. Okay? Now, when that occurs, all right, it also has to take place, the group reversal has to take place on the close of the bar where the group reversal occurs. So let me show you what I mean. This trade occurs without a group reversal. All right? If the low of the band is 80.50, now look at this closely. We don't have much time left. 80.50. The close of this bar is at 80.75. You can't get a group reversal under these circumstances because the bar closes above where the band is. The band is at 80.50. The close of the bar is at 80.75. No group reversal, and therefore no trade. So you have to be very careful about where you set up the bands using this approach.